8:44 a.m. Eastern Standard Time on the East Coast in the United States of America. I'm T-Speaker222 XRP Future Millionaire with the side bet on XLM and Future Digibyte OG. So guys, I wanted to share this. This is about a 3-minute video. But the Fed, the 30-plus year bull market and the interest rates is over, strategist says. So it's a big thing going on. The Fed is going to raise rates soon. And with this rate hike, we're going to do tightening. There's no more easing. And this is something everybody needs to listen to.
I mean, this is really going to guide some of the discussion within the FOMC next meeting. So where do you believe this CPI reading should or could come in at in order to really give us a sense of what action the Fed may take next, or if it will kind of deter or alter the course at all?
Thanks for having me. The Fed is looking at a lot of different measures, not CPI, but of course PCE, personal consumption expenditures, their preferred index. And we think that inflation has probably peaked and will be declining toward the rest of this year. Part of that is just the base effects. As you know, the denominator begins to change as we move throughout the year, so the year-over-year growth is somewhat less. But inflation is going to be slow to come down, and the reason for that is that companies have a wide variety of different factors leading to inflation. There are higher labor costs, there are higher fuel prices, higher transport and logistics prices, higher commodities prices, and some of these are going to come off, but they won't come off all at the same time. So the Fed is on track to increase rates by 50 basis points, probably at each of the next two meetings, as they have suggested and talked about. And as we look forward, we think that we need to see inflation down well below 5% for the Fed to begin to ease off the brakes. And we don't know how quickly that can happen, but certainly not over the summer. And so we're looking at inflation coming down, but remaining well above the 2% that we saw for the last decade and a half after the great financial crisis. Therefore, the Fed is going to stay hawkish through the rest of this year.
And it's interesting, Ellen, it's Julie here. It's interesting because it feels like, to your point, that the market has started to get more concerned about growth than about inflation, and is sort of looking perhaps for any excuse, any reason, anything that the Fed could seize on as a reason to not be as hawkish. But the Fed, it doesn't sound like you think, is quite there. So it feels like that disconnect perhaps could cause some more turmoil in the market.
The Fed has had a put for the last decade and a half, as we know, the famous Fed put, where anytime the economy began to slow down, and particularly when financial conditions began to tighten as measured by the markets, whether it's the stock market declining, whether it's spreads in fixed income land widening, the Fed would come to the rescue. And that is not going to be the case this time. The Fed has made it very clear they're going to raise rates, and they're going to shrink the balance sheet through quantitative tightening by letting bonds roll off and, in fact, selling some bonds as well. And so that idea that the Fed will always come to the rescue, we think is really not going to happen this time. The 30-plus year bull market in interest rates is over. And from here on in, rates are going to be higher. They may not be higher in a straight line. There may be some puts and takes, but we're not going to see continually lower rates from the Fed or from the market.
Ladies and gentlemen, the voila, Tom, I'm gonna have to stop you right there. I see the DXY's pumping. Well, thanks, Bob. I appreciate you tuning in this morning, but yes, the DXY's pumping. It looks like it could be on a bull flag, but we'll get to that after, Bob. Damn it, let me sing. Can I sing Sunny Days? Voila, Tom, it's good to be back. Bob, it's as if you never left. Voila, Tom, you know, I'm feeling good. I'm up big. I used to be down 97%. I would listen to the run, guys. Now I'm not down anymore. Bob, this is supposed to be Sunny Days, not your singing and yada, yada, yada. Voila, Tom, I guess you can sing your sunny days. I'm getting sick of waiting for it. Well, thanks for your permission, Bob. Voila. Have a good one, Tom. All right, whatever, Bob. Ladies and gentlemen, the sunny days are here again. Oh, sunny days. Oh, what a day. Oh, sunny days. Oh, what a day. I wear glasses 'cause I'm so cool. I can predict the charts. Happy days. Oh, happy days. Oh, what a day. Oh, happy days. Oh, what a day. XRP will reign supreme. Let's just not get caught in the fun. Oh, we're gonna crash, and we did, and we are now, and we might fall even more today. Oh, yeah. If the 20 bussin' uses as resistance, it's going down real hard. Oh, yeah. Stay blessed. Stay true. So, good morning, everybody. 8:51 a.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and I reside in the great state of Michigan, as you already know. I have the burial to go to today at 12 o'clock, so trying to get the good voodoo out right now. We got the US dollar currency index that we're actually pumping right now in the 1 minute and the 30 minute. We're coming almost to a head formation, it looks like, but this might not be over yet. If it can break past this resistance, it could. I don't know if it has the muster, the strength, the testicular fortitude, but it could come up. This would be the cross. Yeah, okay, so it could come up to 106.200 right now, as it never hit that target yet. And if it breaks 106.2, it's going to be an issue. But if we go up to 106.2, the market's crashing in crypto, and you can already see it might crash today. If the US dollar currency index breaks this area of resistance, look the fuck out. Look out below. You got the total crypto market cap at 1.11936 roughly. We've got Bitcoin under 29,700, making its way back to 29,500. Let me take off that indicator. And that's a pretty big pull down here, ladies and gentlemen. Big wick pull downs. These are the stationary candles now where we're probably going to pack test the drop point. It's so freaking funny how it does this all the time. Notice how the volume died. And then it'll come up, and it might even push back up. We'll see if it's a fake candle or not. But in my humble opinion, we're getting closer and closer to breaking down. And when we finally do, we should hit down here for the first hit. And it's going to be around 29,000. But that's going to show this. Where's it at? Yeah, so about 29,086. And that's going to show the busted pattern when Bitcoin gets down there. We got XRP. And I like showing both of my charts, the XRP USDT and USD, because then you can see. But we still haven't broke this uptrending support. We've been stuck in what I consider a bear flag. And we've been rejected by the 20-day and the daily for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days in a row we've been under the daily on the 20-day. We've hit it 1, 2, 3. We've hit it 3 actual times and rejected. This looks like another squeeze candle today. Unfortunately, it hit the resistance, which is the 20-day up here at 41286. Now it's coming down to the bottom of the zone at 38636. So if it breaks this ascending triangle, then it comes down to 38226, 37484, and then ultimately that 336 or 34135, depending on how it wants to hit that support. And then if it breaks that, and I can't say, oh, it's going to do it right away, but I think we're coming down to 11 cents before this is all said and done. But I also don't think this pattern's got much more room left in it. So we've been talking about it for the last couple days, that this is a very dangerous spot, but we have to fill out this ascending triangle. So, you know, it might come back down here to support and then run right back up to 406. It's just been in that kind of a pattern. So until it breaks these levels down, not much you can do. But the difference right now is that 30-minute volume is a great candlestick. That's a big volume. It's a big bear. A lot of wick pull up right now, which is completely normal because now we should retest the 5-day on the 20. just to see the drop point reset, and then if it gets rejected by that, then it'll carry on. The 15 minutes already completed the bullish or bearish divergence. Now it's up to the 30 minute. But that's going to be quick. These are all so tight that these are quick divergences. You're going to see it across every time frame, basically. But I think with the failed back test on the 5 minute, this could very well break down even farther. I think today is going to be ultra volatile. I came on and did a video yesterday on Shiba, and I talked about how it was going to go down. On the article, it said it might go up, and I called it bullshit. So if you're paying attention, I know somebody in the comments called me an idiot, but somebody spammed out the comment, but I still got to see it. But not an idiot. It's just you have to make sure that we broke down the 20-day on the 30-minute time frame last night, and that's all I was saying. Last night when I put that video out, we were over the 20-day. But I said it looked like we were going down, and it's going to be a volatile move. And it's already started out as a volatile move since I put that video out. So that's why I put that out. And thank you for calling me an idiot. I cherish that comment because you've helped me in my analytics. XLM, USD. Again, just like, I mean, this is the 30-minute candle of hell right now. Look at that volume. This is indicating that we might have just rolled over. It's just, they can have fake out candles too, and that's what I always want to be cautious of, the fake out candle. So in the immediate short term, what we're looking at with XLM to make sure whether or not this pattern is verified. I mean, this doesn't look good at all. This is finally breaking down like we've been talking about for days and days and days. Let's see how we're looking on the 5 minute, because you always get the back test, usually. Yep. Crashing volume. The price isn't able to break these recent lows. We'll probably come back up and retest the 5 minute. Where's the 30 minute at? We already retested the, well, we haven't technically retested the 30. We'll see. We'll see if this volume continues coming in or if this was just one bullshit volume spike. And then DGB. Look at that sudden reversal. Got all the way up to 1250 and then phew, it's a big flip. But it's trying to finish out the ascending triangle. We had the top end resistance, and see why I put that up there, because it actually came up and hit it. And then on the ascending triangle, we have the uptrending area of support that's been created, and that's why we put it here, so that when it breaks through levels, we know the next level. So now we might come back up and back test 1195. On a rejection, you would play it down to about 1110. So that's what I'd be looking for this morning. Hashtag be better, do better. Hashtag FUD Assassins. Remember, help one person each and every day, because if I don't do my part and you don't do your part, what the hell is the point? The society's going to be one hell of a big mess like it already is. So UB2B, I wanted to share a little bit of his stuff. Beware of the FUD fiends. Boss, why doesn't Tom's Army listen to us? Yeah, boss, why don't they buy our FUD? Because they are our nemesis. They are FUD Assassins. Join Tom's Army. UB2B. I love this guy's stuff. So we're going to be talking about UB2B because he's got some NFTs on sale. So I'm going to try to figure it out. I just been busy the last few days with this funeral stuff. So, but just be aware that that's going to be available from UB2B. And then I want to end out with, I already sang Sunny Days Live, but I want you to hear the recorded version. And I did add a caveat today. I sang the second verse. I did 4 verses today, but the second verse I sang like I did in this song. Sunny days, here again. Sunny days, here again. Sunny days, here again. Sunny days, here again. I wear glasses 'cause I'm so cool. I can predict the charts. Sunny days, here again. Sunny days, here again. Sunny days.